If you want to learn a powerful, effective, and outstanding risk-reward trade that very few retail and independent traders know about, but that most professional traders profit on, and stick around for this video. The step-by-step method for how to spot and trade the setup will be revealed, and with a recent trade example from our trading desk in New York City. Get a peek into the trading done on a professional proprietary trading desk in this next video. Hi, I'm Mike Bellafiore, managing partner of SMB Capital, a proprietary trading firm located in Midtown Manhattan. I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of our trading videos produced for the trading community. The trade we're going to share in this video will help improve your trading. It also possesses the benefits of offering easy trades, offering clean technical analysis driven trades, offering excellent risk reward trades, and offering trades that can make your month, even in a slow month. If you want to learn 4 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turns one of our traders into a 7-figure big money earner, check out our free webinar that we're currently running. Just go ahead and click this link to sign up for free right now. You're going to learn more in a couple of hours from this trading workshop, which we put together for you guys, than from years of online education. Go check it out. Let's get into an IPO trade so that you guys can add this to your playbook. So what's an IPO? An IPO is initial public offering. Initial public offering is when a private company or a corporation raises investment capital by offering its stock to the public for the first time. And we're getting this from our good friends at Investopedia. It's a private company that you finally can trade on a registered stock market. So the benefits of trading IPOs are they offer easy trades. The trades are clean, technical analysis driven trades. So lots of times you make technical trades and get frustrated that they don't quite work out or they're a little bit bumpy. These are trades that are clean and more likely to work just based off the technicals, and I'll explain why. They offer an excellent risk reward. So lots of times you talk about making trades that have a risk of 1 and a reward of 5. Lots of traders, when they're first learn trades with a risk of 1 and a reward of 2, and we ask them to think about that a little bit more in depth and look for risk rewards that are better. Well, these types of trades can offer even a better risk reward than 1 to 5. Look, these trades can make your month even in a slow month. So I've sat around trading desks for almost 20 years now, and we've had big months during slow times just by having really great IPO opportunities. So we're thinking about this as adding to our playbook to give us more ways to make money. Some traders, they just focus on these trades. It's called syndicate trading. They're just focusing on IPOs and secondaries. And these principles also apply to secondaries. IPOs and secondaries is what professional traders refer to as syndicate trading. And the great thing about trading IPOs is that you're learning the next new hot stocks. You're watching them from the beginning, and that's really helpful as they mature and offer continuing opportunity. The best IPOs, well, there's a buzz about their release. And a good way to define that is look at the headlines. Are people talking a lot about an IPO that's getting ready to hit the tape? If you start tracking this, you'll see the ones that get hot. They price above the initial pricing range. So you'll start to hear whispers that the company is going to price between $20 and $22. And then the IPO price comes out, and the IPO price is higher than an initial pricing range. So maybe it's $25. And the reason why that's important is because that shows that there's a lot of demand for the particular IPO, and it couldn't even get filled in its initial public offering. So there's going to be people on the sidelines who are likely to jump in when it's trading live in markets who couldn't get it with a special IPO and are going to want to buy it when it starts trading. You want to look for tier 1 underwriters in the stock. If you're looking at tier 3 underwriters in a particular IPO, that's probably not a good sign that the IPO is going to be hot and really pop. You want to see the IPO open above the IPO price. So let's just say the range of the whisper was 18 to 20, and let's just say they priced the deal at 25. Well, when that opens, you want it to be above even 25. Those are the variables of a hot IPO. And then you want it to be in a hot sector. IPO comes out in a hot sector, there's going to be more confidence for people to jump in there and buy it, as it's a way for them to invest, and perhaps something that they aren't invested enough in, that perhaps they don't have enough risk for that particular sector, or it gives them another opportunity to catch something that they've missed. So the fundamentals for this IPO trade, this happens to have been in Sono. It's a company that designs and develops multi-room audio products. I'm sure many of you who are listening to this presentation have them in your own home. They're competitors with Samsung and Apple and Amazon and Google, but they get some really cool, neat speakers that a lot of people are using in their homes. The range of this deal was $17 to $19, and it could only sell for $15. So that's gonna make me pause about whether or not this is going to be a hot IPO. Now remember, we think about trades in variables. So this is going to be a strike against the company, but it doesn't mean we're not going to want to trade it on the long side. It just means I'm going to be a little bit more cautious because they couldn't get the deal done above the range. If it was a hot IPO, it would have priced at 20 or above. Sonos speakers can play music from Amazon, Apple, Google, respective of streaming services. The IPO follows many high-profile offerings such as Spotify, Dropbox, and DocuSign. So I like the thinking here, which is how did other IPOs in this particular sector or a similar sector do? If they were hot, it makes it more likely that this IPO is going to see a lot of demand. Market cap, pretty big, almost $2 billion. Average volume, 11.4 million. And 52-week range. It just had started when we're going to show this example, so let's not make a lot of that. All right, the overall outlook in the market. Market's strong. Qs had rallied. We look at tick to tell how our trading is intraday. It opened negative, but by midday there was a high tick. So always want to check in on where we are with our overall big picture, where we are with our overall markets when we're making trade decisions. One of the variables we want to check in on. All right, so we've done that with markets. What's next? Our SPY daily, we're up towards highs. We want to look at the big picture. Where are we with this overall market? SPY on the 1 minute, intraday, the market was very strong. That's going to make it more likely we want to get long stocks than short them. Qs. All right, this is tracking a technology sector. Has a technology sector overall strong, doing very well. You can see from our daily chart, near all-time highs. 1 minute. This is a day where the market was very strong, technology was strong, the SPYs were strong. Look how it holds consistently above VWAP. VWAP is this purple line that we've drawn for you. Look how VWAP is sloping upwards, another sign of strength in the overall marketplace. The ticks, this is something that we look at to determine strength in the overall market. Started negative, started to get a little bit more positive, gaining a little bit of momentum for people to buy during this day. We look at their daily chart, not much, only have 2 data points. But good practice to think about where we are in our daily charts. We look at our 5 minute, and we can start to see some levels that become important, and we'll point them out to you. Look at our 1 minute, and I'll talk a little bit more about this. Strong uptrending stock, holding very cleanly above VWAP. All right, so I said at the beginning that IPOs trade better overall and are cleaner technically overall than a lot of other technical analysis trades that you make. And we all hear frustrating stories about, oh, I bought the breakout, didn't work. Oh, or I shorted the breakdown, it didn't work. Or I bought it at the 200-day and it didn't work. Or I bought it at the 8 M&A and it didn't work. And so these are levels when they get created that work better. And they work better because they're new and they're young. And it's not as hard to figure out what the important technical levels are. That can be some of the problem that you have when you're looking at other charts to make decisions based on technical analysis. There's all these data points, and people can interpret them differently. With young, new stocks, there aren't as many data points. There's not as many conclusions and different conclusions that can be made about stocks. Gets above a 52-week high. There's not a lot of 52-week highs in the stock, and it's probably going to go up. So the opening print is a important technical support level for IPOs. The very first print. If it's above that, that's a sign of strength. If it's below there, we want to note that and probably wait for another support level to show itself. The IPO price is a very significant support level in an IPO. That's because the underwriters want to support the IPO price. They don't want to be embarrassed and lose money for the people that they're doing this deal for. Breakout prices are significant technical levels. All-time highs are significant technical levels. IPOs with technicals, they respect technical levels much better than other stocks. And then we're going to show you in this example, 50% above an IPO price can be resistance. All right, so let's take a look at a marked up chart on the day that we were trading this IPO. We've got the stock 16 was an importance level where we started to look at. Now remember, we got priced at around 15, so it's opening up above the IPO price, but that opening print ticks a little bit at 16, and then it starts to pull in below that opening print and starts to pull in towards that 15 area. And so remember, 15 is our IPO price. It's not very likely that it's going to trade below 15. And so as it's pulling into 15.50, I like to scale into 15. So, all right, it's below 16. As it's pulling into 15, good company, good underwriters. I think that 15 level is going to hold up. It's not likely it's going to trade below there, particularly in the first day. I'm going to sort of scale in. So I'm going to buy a little bit of 15.50. I'm going to buy a little bit of 15.25. I'm going to buy a little bit into 15. And then if it holds 15, I'm going to really buy a lot. So every 25 cents, I'm making a trade decision to sort of scale into a position, assuming that 15 is going to be an important technical support level. And then that 16 was that opening print price. We talked about how that can be a technical level. So dips below a little bit below that 16, comes into 15.50. We buy a little bit there. Tier 1 gets above 16 again. So holding above that opening print price again, that's going to be our support level when we buy at Tier 2. It gets above the high that was created. Now we're at a new all-time high. We want to buy a little bit more, Tier 3. We're going to trade that as a momentum lot on the breakout. We're going to sell stocks that are parabolic to the upside, that are unsustainable at price. So we get a stock that goes up, slows up a little bit, and we're going to take some off. And now we're starting to see a little bit of a level develop here at this 1850 level. Get a good support level here, it gets below it, comes back to it. Good consolidation here at 1850. A lot of people buying and selling up here. A little bit of a fake breakdown off this 1850 level. Reclaims it just like we reclaimed 16. When we reclaim this 1850, we can use this as support. Our stops are going to be below the last consolidation area, and we're going to ride the wave to see if this will go back up. I'm going to get a little bit back in here. And that stock, again, we want to sell into the strength, sell into moves that are too spiky, that are parabolic, take our risk off. And so we can sell Tier 3 and Tier 2 into the high, into the close, and we're going to hold one overnight. And the reason why we want to do that is just show you how you can turn this into a swing trade as well. I like to hold positions that are doing well into the close, particularly if they're IPOs, That's a good best practice. If things aren't trading well into the close, cut it and start over again. Next day, we get a stock that goes up to that 50% above the IPO price level. We're going to get that around this 2250 area. And so we've got a trade decision there. I think when we get up to about 50%, that's where we want to start taking some profits again and watch. One of the traders on the desk noted that one of the last important IPOs had trouble at 50% resistance. Some advanced traders will even start to short it and watch to see if there's weakness up there. But that's a technical point of reference for you as well. So we can swing that and capture a little bit more as that stock closed a little bit near 2050. And then we got a little bit of a pop on the open, a couple more points, take that off and start again. So in our trade review, we want to think about where we could have traded it better, where we could have traded it bigger. What you learned from this talk: how to trade an IPO. Important technical levels for IPOs. IPOs trade better technically than other types of stocks. A new trade to add to your playbook. Professional traders have this in their playbook and profit on it. I think a lot of independent and new guys shy away from it or don't know about it. Maybe you guys do. How to think through a trade like a pro. So we're always managing our risk. We saw the consolidation area where we took it off. We want to sell into strength, buy into pull-ins. We want to get into the habit of taking profits, even when we're in the money. So we're more consistent as a trader. So if we're long, we're going to sell the spikes and try and buy into a little bit of a pull-ins. If we're short, we're going to cover into steep down moves and make cash flow around our core. And you certainly learn how to build a playbook, how to build your trading business. I always hope that the thing that you learn from these videos is how we're thinking through trades, how we're putting variables together to make a complete trade and not just relying on one thing to make really solid trades. So if you learn anything from this video, I hope you start to think about your trades with more variables. I hope you make your trades your own. I hope you make your trades very consistent for the way that you go about trading, and you settle in on a playbook. You build a playbook. Your playbook is your business, and you can judge your trading based upon whether you're taking a trade in your playbook or outside of it. Overtrading is taking playbook trades outside of your playbook. Poor trading is taking trades outside of your playbook. Losing trades inside your playbook are fine. We're happy with that. Trades that you didn't put enough risk on, that are A+ trades in your playbook, you need to focus more on. You got to make more on your A+ trades. That's not acceptable. You got to push it from your positions of strength and in your best trades. Go ahead and click our subscribe button so you don't miss any of our trading videos produced for the trading community. Please add your feedback in the comments section for the videos you would like us to produce next and what you found helpful from this video. From all of us at SMB, trade well.